If you're following crypto, you've heard of DeFi, Decentralized Finance. DeFi involves peer-to-peer financial services that happen on the blockchain rather than being intermediated by traditional banks. And importantly, DeFi gives entrepreneurs a new way to fund their projects by going directly to their customers. But as we know, with powerful technology comes great responsibility. So I asked 4 crypto experts to explain to me just exactly how DeFi works. Listen in and learn the top 7 things that you need to know about DeFi.
So for DeFi, which stands for Decentralized Finance, it's actually a mechanism where the financial system is controlled by a pool of people. And so each person is their own bank. This basically cuts out the middle person. It means that you can put your money in and take your money out whenever you want. And it means when you go and swap on Uniswap, which is a decentralized protocol, you basically are using someone else's money, who is another individual who's put up their money to make money while you do that swap and make a fee. In a nutshell, DeFi is replacing banks and also exchanges as well. And the way we pool money together, and then the way you earn interest and money and rewards, all of that is being re-incentivized to go back to the individuals and the early movers who create them.
I feel that the financial infrastructure is ripe for new innovation. And I feel that cryptocurrency and blockchain is perfect to actually do this. So for example, back in 2014, I was based in the Philippines, and one of our biggest GDP driver is actually remittances. And I was really curious about Bitcoin as an infrastructure to move funds. And fast forward today, we have the concept of stable coins and the concept of asset tokenization. And I think there's a lot in blockchain and cryptocurrency that could actually be applied in traditional finance.
On the one hand, you basically create these open markets. On the other hand, you get much more short-term thinking investors. I will say that's not all negative. So for example, you need market makers to generate liquidity for certain markets in DeFi, and that's a good thing, but you may not have these long-term investors that are with you in good and bad times. So one of the reasons why these days with an OTC deal fundraiser happens, usually investors are locked up for 4 years, and that is more aligned with traditional VC investing, although I would say still earlier, like shorter time frame than even that. And that is bringing longer term sighted investors to the table to work with the project. Short-term minded investors is challenging, although I'm a believer that if the team actually creates great product, people will be involved long term. And there's needs to be more focus on actually just creating great products and use cases. So I think there's something to be said on both sides.
So absolutely, there's investors, they get incented in some ways for speculation short term, partly because of how are you going to set up your unlocks? And some people are like, I'm fine just going for the ride. What I've been seeing a little bit on the founder perspective is that the founders that sometimes are building in this space are now saying, I could bootstrap my company with an NFT drop as well. So they don't even need investor money. I've certainly been seeing it on the flip side, how I wouldn't call it short term, but maybe it is. Whoever these people are buying these NFTs, another founder interpreted as, Holly, in Web 2, you need a huge audience in order to get that product market fit. But in Web 3, they were like, we have product market fit, but just by doing an NFT drop, they're like, within 7 minutes, we had like $7 million. For them, like they now have money to sustain their own business. Are they building something that people want? In free-to-play game, the old school world, we used to call them the whales. They account for 2% of the players, but they account for 80% of the revenue. It's almost like they just targeted these people in crypto. So for those founders, they're like, we need capital. And for us, that's enough for us to continue building and continue building out their universe, continue building out their thing. So in some ways, that's one way that I've seen founders bootstrap and really just say no to investors. And I think all of us had seen hot and heavy rounds on the back end to where investors cannot get in. Is it true product market fit or is market fit? Regardless, they now have capital to sustain themselves.
And you've seen that they've raised their funds, and then a lot of these founders and a lot of their team members, they end up buying their Lamborghinis and then gone. They have no product. And we actually looked at YGG as really something that we'd like to run in the next 10, 15, 20 years even. One thing that we are really thankful of is every single investor that was actually in our round, we've interviewed, we've asked what value would you provide. We may have turned down some investors. Imagine if we actually just sold our tokens at a really high price. And let's just say because markets are irrational, obviously the tokens will correct at one point. If your investors are no longer there, you're just left alone as founders and figuring out how to work this protocol or startup. And it's really difficult. So you can need all the help that you could to like really build up your product.
There's a lot of money in crypto, so it's not just about liquidity too fast. Suddenly, a company of people who don't have any background with money suddenly get like $50 million. And that's really great. I definitely see sometimes early overspending or not looking at it as long-term growth. I also see people getting massive FOMO. So it's like, I'm building this project, but it's not going to be sexy in like this next 6 to 12 months when I launch it. So I'm just going to launch it half-baked in 2 months and just see what happens. And I've noticed that it's just a learning curve. I wouldn't say it's a mistake that everyone makes, but it's a learning curve that people have to balance all of the technologies. Yes, I can go make an NFT. Yes, I can go make a DAO. Yes, I can go make a utility token, or maybe I want to go public and maybe I want to do everything. And the problem is that usually everyone's in the last category. And then also like for the people finding out what they really want to do, because often they'll get thrown into an idea. It has so much money. You didn't even have time to think about whether you actually wanted to do it. And then you burn out. So these are the early struggles I see. I don't think they're that different than like Silicon Valley traditional startup. That also had a similar problem because that also ignited so fast with so much money as well. I see a lot of teams, and the ones that do the best are the ones with like the fiery passion, who like know what they wanted. And they might take a while to discover it, but once they get that fire under them, they're like, I want to do this. And a lot of the teams we work on who are like this could have retired like literally years ago, but they're like, no, I don't want to stop working. I love what I do. And this is why I'm here. I'm not saying that you have to be in that situation, but it has to be the thing that you want to do no matter what, because crypto is this beautiful niche playground where everyone can find it. And just as long as they go in with a level of humility of it's easy overnight, and then immediately the brain might be like, wow, this is great. It's been this way all the time. It's going to keep being this way. It's like, no, you have to turn this into something long lasting.
So to summarize, DeFi is a broad umbrella term for peer-to-peer banking without the need for centralized institutions. It's basically a new twist on financial collectives like credit unions, which pool their resources to help all the members. And for entrepreneurs, DeFi offers a way to crowdsource fundraising by going directly to customers without the need for traditional investors. But beware, because raising money quickly can fool you into thinking that you have product market fit. In the end, the teams that do the hard work of building a great product that customers love will be the teams that win. So make sure to subscribe so you don't miss out on the latest startup tips for entrepreneurs. See you next week.